Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday. And I almost said Wednesday. It's Tuesday, the 25th of May, 2021, and I'm late. It's about 7:30 at night, but these markets aren't open anyways. Now, before I go anywhere and talk to you, I want to talk about this. No, not coffee, not that X, but something new. It's called What's Up. And this Thursday, that's coming on the 27th, at 12:30 p.m. Central Time. I live in Chicago, it's Central Time. You're going to be able to join in on a Zoom webinar. You'll be typing in questions, ask me, and bring your symbols. I don't care if they're futures markets, what they are. You can ask a question, I'll read it, I'll do the symbol, and that's it. It's not going to be like my normal webinar where you're going to ask me, explain Bollinger Bands again, Ira, explain this. I'm not doing that. This is about looking at individual charts. What are they showing us? Should we make a move one way or the other? That is what this is about. So if you're interested in that, it's fast-paced. It's intended to be 15 to 20 minutes long, and I'm going to cut it off. I'd rather do a couple a week than one long one. It gives more people a chance to come in, throw their questions out, and if you'll notice the time frame, I'm trying to pick 12:30 because it's the middle of the markets. And you can see what's going on right as I'm seeing what's going on and help you with it. How do you get into it? Well, the simplest way is you see this link that's up here on YouTube? Just click it. That'll take you to the invite. Yes, there's an invite. You sign up ahead of time. It'll send you everything you need to get into the Zoom webinar that will begin. I'll probably open it around 12:20, 12:15 this coming Thursday, and it'll start right on the button at 12:30. No, you're not going to be able to go view it on a website. I'm not going to put it up there. You either attend or you don't attend. It's really going to be that simple, okay? So you do that, you decide. If you have trouble getting the link, call my staff. Don't call them once it begins. We'll be full. It'll be too late, and it is limited seating in it, and it is free to you. Okay, so let's go to the markets. You have quite an interesting event. Interest rates have been falling, not going up, so everybody's scratching their head. The battle is on at the Fed as to the appropriate time to discuss tapering. Is this it? I doubt it. I doubt it in a big way. If employment were to jump to 1 million all of a sudden, I think it would be appropriate. But what if employment sits around 300,000, 400,000, 500,000? Well, it'd be better than what we just had, and I think it will improve, but until people decide to go back to work, what do? I know in Chicago, they put up an ordinance that they're discussing right now because if you call on Lyft or Uber, they're gouging you. And that's because there aren't a lot of drivers out there. It's really that simple. People are making enough money, staying at home between state aid and this federal $300 a week. They'll wait it out, and in September, they'll all go back to work. And I'm not talking that's for everybody, but it is $600 a week and more if you have children and so on. So suddenly, instead of working 14-hour days as the drivers do or people in restaurants, that's the problem. There isn't a restaurant in Chicago that isn't screaming for help. I mean, that I know of, you know, it's just interesting to see what's going on. But let's go to the charts. ARK has had a nice bounce as the FANG stocks have come up. You can see how the market's had a big lift here. The pattern changed bullish when this high right here took that out, and I was with you on it. We were talking about that. I said, I think you ended a down leg. And now that got the pattern higher lows, higher highs, so you're in an up leg. That's the definition of an uptrend, unless you come back and take out 100.03 on the current pattern. Let's filter it with some moving averages. The 18-day average of closes is right here in red. That's normally where a market fights a battle. If you're down hard, you come back there just like you did here, or you're up good. You fight battles at that number looking for the next main direction. That's exactly what I think is going on. So that's my battle zone. Let's assume the market continues rallying here. The 200-day average is waiting at 114.49. The problem for somebody coming into this, if you buy it right now at 109.38, the way that I teach charting, if you put a stop under the most recent low, it's 100.03. That's a 10% risk. That's an awful lot to take on that. When I look at the Bollinger Bands, they're going to narrow in and keep coming down. They might even attack as early as tomorrow, right in that area, this 200-day average, and this is coming up. So where's momentum? Well, momentum is still looking good. It is not overbought. You have to be over 70 to be overbought. So momentum up, bias up since you're over the 18-day average, trend up. Risk I'm not favorable on, but I do see support on the pullback at 107.68. GameStop, is this the breakout, the beginning of the breakout of this whole sideways action? It certainly could be. This is what I call the psychiatry trade, because you try breaking out both sides against that Bollinger Band. The key to the breakout to me is doing what the first day here did, having a market get over that Bollinger Band, closing in the very top quadrant. Now tomorrow it would have to make a higher high than today, close over that top quadrant, and then I'd say it looks like there's a breakout. The other part of my rule is I teach to never buy over a Bollinger Band, ever. There's no circumstance that I would let my traders do that with me doing it. They can do whatever they want, but they're not going to get me to say that. Rather, I think they're better off waiting. Let's talk the big negative. You're overbought. So you've used up an awful lot of power to get here. I think the pros are going to come out, not in, right here. Minimum cutting down the position in a big way. I think they began that yesterday, to be honest. PAVE. You don't have a deal on infrastructure. I think they're actually getting further apart. The press plays it one way. When I see $1 trillion apart and the Republicans with their newest proposal might get to $1 trillion, but the Biden campaign's $1.7 trillion, how do you make up the difference? I am confused, and I wish some of you would write for me on the YouTube page. Why aren't we using money already approved for COVID that is not being spent on anything? It's idle. And applying that, if they want, to this infrastructure program, and how much of that money would be there. I've heard that it's really sizable. A big part of that difference. To let it just sit and not be used, we're at the other part of the slope on COVID. Maybe you know something I don't know. I always love to learn. Are we trending in PAVE? Nope. All you did is bounce off the lower band to the 18-day average. All you did on the uppers from here down. Look at this pattern. Got that? You see that high right there? Come back with me here. Be careful. That's my point. Apple. Okay, back up to neutrality. A lot of resistance right at the 18 to the 100-day average. Momentum is there. I think you bottomed against this challenge of the combination of the Bollinger Band and 200-day average, and I most certainly said it. Go look on your YouTube. It's not a prediction. I'm just saying that's where I thought the market was going to see the pros step in, and they did. But what do you do right here? And that's the difficulty. It's not in an uptrend. It's not in a downtrend. In XSD, everybody wants to see semiconductor work. You're already overbought as can be. Be very careful. You're not even close to changing it to embedding. I think you're on borrowed time on the upside, and no, I'm not bearish. I just think the market got ahead of itself. I was looking for PODX to get back to the 18-day average. It did it. Now it's got to figure out what it does when it grows up. It's seen a low. It's got a bullish trend up on the swing line. The bias is down because you don't close over that number, and momentum's up. Even if you close over 1350, the question is it going to be enough to get the market to do something here of interest? Sort of a market that's not doing an awful lot. ESGU, my eye immediately goes to it being overbought. Any reading that's got a 70-plus reading on the slow stochastic is overbought. Trend up. It managed to clear. If we come over here, your first battle should have been the 18-day average like it was. It kept fighting it. It cleared it yesterday. It's trying to continue that up move, and it's on borrowed time. It's too overbought. I don't think it's going anywhere at this point. XLE, why would you get involved until we know what the Iranian situation is? We're going to hear an awful lot now in Vienna about what can and can't be done, the promises being made, what sanctions the U.S. would consider lifting. I hope the Biden administration does not do what the Obama administration does, and in the middle of the night bring them billions of dollars. The equivalent would now be taken off blanket sanctions and trusting them. This is a hard-line government in Iran. Don't know how to say it any cleaner. And hardliners do not mean they want to make peace in the world. So we let them have money, and are they going to use it for terrorism? That's how I'm equating it. They can do their own hardline things at home. Just don't be terrorists of the government. That's what I am saying. EFA, lower low, higher high. Don't see anything there. GLD, higher lows, higher highs. Not there. Oh no, I'm still bullish as can be. This market could be on its way to 179.29. There'd be a couple of stumbling blocks along the way. I still think the pros are going to buy each break that you don't take out the previous day's high of. I do not see that changing. I think the market will look at this, and until the red line's under 79, gold is taken off to the upside. The next target could be 179.29. Gold miners today rescued themselves. I was impressed. Another update tomorrow could set this market to 40.97. What isn't moving are XME. And people wrote me, you know, Ira, the other miners aren't working. I know. I'm the one that's been telling you it's gold that's moving, not silver, not platinum, not palladium, not copper. And that's what XME covers a lot of. TLT. You've got now a market that's had this bear market rally from an oversold condition. It still has room to run, but it's not in a trend. Now, where was this set up? Right here. Do you recall we had that outside day? And one of my rules is if you take out the high of an outside day within 2 sessions, the market's likely going to the closest moving average above it or a Bollinger Band. Bingo. So the rest of it's the gravy, all right? It's hit the objective. Could it keep going? Yeah, but I don't see how to get in because I don't have the uptrend at work. FXE, still very much in an uptrend, embedded, powerful. Breaks in this market should be well supported. That's where I think the pros want to come in on this market. So you put it together, you see what you got. Remember to click this icon if you want to attend our Thursday at 12:30 p.m. Central Time live webinar. I'll open the doors around 12:20, 12:15, so you can get yourself situated. Have your symbols. I want to see if that's any of these, bring them in. Whatever you've got, we're going to throw them on a chart, analyze them, and I'm moving right on. I am not going to explain how moving averages work. I'll do that in regular webinars. These are going to be lightning bolt, if you will, very fast. I love what Kramer does. I'd like to do something similar in the commodity markets, but I don't have a team behind me. He's got a great amount of producers. He's a lot bigger than I am, but let's see what we can do with it to make it work for the commodity people and the SPDR ETF people. I'm Ira. You have a good day.